Welcome back everyone. Now with the changes taking place in the US with the likes of Biden, now the president-elect, I wanted to look into how this may impact future investments of mine. Specifically, we'll take a look at some articles that focus on Biden's viewpoint of the economy. Then we'll be taking a look at what Think Tank has suggested, which is for those earning above £19.5 thousand, they should be paying more tax after the pandemic. So I'll be providing my own thoughts to see if I agree or disagree with that statement. So let's get into the video. Now in terms of my portfolio this week, we have an account value of £19,000. I haven't actually invested any additional funds, that is strictly from the gains. So we can see currently the portfolio is up 9.35%, that's given a returns of just over 1.5k. I say this often, but when the markets are higher than usual, it's almost a double-edged sword, because on the one hand you have higher profits and it looks good on paper, but equally it just means everything's more expensive for those who invest in the long term. But equally I don't want to see values always in the red. I do want the economy to push forwards. But I think we can all agree that a return of 10%, although it's nice on paper, it makes buying a lot more difficult. It's not to say that there aren't some companies that are investable, but for the ones that are extremely high, I'll be staying away from those for now. And in terms of the PIRs, we just have bonds, which is at negative 2%. All the rest are in the green. Now, as you're aware, a lot of the companies that I own are US based. That's simply because during the pandemic, a lot of the UK companies stopped paying their dividends, and so I favoured the US companies. What it does mean is that my account is more susceptible to the macroeconomics, such as the current situations in the US. Now, when I built this portfolio, this was under a Trump administration. So the question that I want to answer is what happens when there is a switchover with the government. Now I have a video that was back in 2019. This is during the period when the US was deciding who was going to be the leader for the Democratic Party. So let's take a look at Joe Biden's viewpoint with tax cuts and income inequality.
Senator Sanders, as you know, has been calling for a revolution. Recently, in remarks to a group of wealthy donors, as you were speaking about the problem of income inequality in this country, you said, we shouldn't, quote, demonize the rich. You said, nobody has to be punished. No one's standard of living would change. Nothing would fundamentally change. What did you mean by that?
What I meant by that is, look, Donald Trump thinks Wall Street built America. Ordinary middle-class Americans build America. My dad used to have an expression. He said, Joe, a job is about a lot more than a paycheck. It's about your dignity. It's about respect. It's being able to look your kid in the eye and say everything's going to be okay. Too many people who are in the middle class and poor have had the bottom fall out under this proposal.
So what I want to call out is that the middle class relates to individuals earning from $50,000 to $150,000.
Education, healthcare, how are you going to pay for that?
By writing the tax code. You got billionaires in this country making $700 billion during this crisis. $700 billion. Nobody making less than $400,000 will pay a penny more in tax under my proposal.
That's a promise.
That's a guarantee, a promise. I give you my word as a Biden. That's an absolute guarantee.
And you think it's a good idea to raise taxes when the economy's in dire straits?
Depending who you're raising them on. Look, if you're raising somebody who's making $1 billion a year, it's not a problem if they pay 39.6%, which everybody should pay, raise another $90 billion.
So for anyone earning over $400,000, that is where there'll be increases in taxation. My honest view here is that it's a lot more fairer than having to tax people with less income. And so someone who does earn a 400k salary, all of that money will be subject to standard taxation like anyone else would. And then it's the earnings above that threshold that would have higher taxes. Now, given that you have more money, you're able to afford a lot more things. And generally someone who earns that amount of money, they probably found a way to not have to substitute their time for money. And so regardless, they're making a lot of money. And the question is, do they really need all of that cash? At what point does it become greedy? So if your goal is to generate more money for the government to spend on other areas, for me this does make sense as a policy. The issue though is that any companies out there, they will be subject to this types of taxation as well. And that could result in employees being fired, etc., just because of the costs that the company is paying in the form of taxation. So as with most things, there's always two arguments. From the perspective of an individual, then this tax cut makes sense. from the business side, I can see why this type of policy would be less favourable. So let's dig into this a little bit more. Having a policy that increases taxation on corporations is predicted to have the most impact on the stock market. So we have Goldman Sachs here that estimates that the corporate tax increase and also the social security increase would actually reduce the S&P 500 index. And they've calculated that somehow to lead to a 9% decline in the value of the index. Now here's the thing, right now the Senates are Republican, so the chances of this corporate tax bill actually becoming policy is close to near impossible. The markets are aware of this, and that is why this is not factored into the current stock price. Now for those of you who do look at oil-based companies as a form of investment, it's clear that Biden focuses a lot more on climate change. For sure, that is a positive. And what has been announced is that there will be a push towards reducing subsidies in the form of tax codes for companies that use fossil fuels. And then the banning of fracking at a federal level is something that Biden plans. But for private companies, this is not actually the case. And so right now, in terms of the oil and gas industry, it's somewhat uncertain. We're not fully sure to what extent Biden's policies will have an impact on this sector. Given that I don't personally invest in the likes of oil-based companies, I actually like the fact that he favours renewables, and some of the ETFs that I own are favouring towards that renewable aspect. So in terms of tech regulation, it's no surprise that with the Republican Party there's been a lot of problems with the likes of Google, Facebook. The idea that these companies have a monopoly has not been seen as ideal, and so there's been a lot of push for legislation to try to reduce the powers that these private companies have. I'd say that from the Democratic side there has always been a focus on the privacy regulation aspect. So companies that fail to protect your privacy are the ones that Biden is suspected to focus on. Even with all the regulation that is being pushed, it's my personal view that tech will always be able to overcome any types of issues. There's just a built-in resilience when we look at the type of tools that we use. It's so ingrained into our everyday lives that unless there's a complete ban of, say, a given company, then for the most part, tech as a sector often outperforms that of other sectors. And now when it comes to trade, there is the trade war with that of China. So the overall consensus here is that Biden will stick with the tariffs that were previously set by Trump with that on China. There's a possibility that there could be some open discussion there to try to deal with the internal problems for the future. Now in terms of the tariffs on China, of course they are not ideal for US-based companies. If we look at the likes of Intel, their suppliers are all over the world, and so it does require transformation and to look elsewhere for some of the hardware elements. So overall, how does this impact our portfolio? Well, there are definitely some areas where if you have a subset of companies, let's just say you focus primarily on the oil industry, then there's the possibility that your portfolio could be impacted with some of the suggested changes that may take place under a Biden administration. But if you are well diversified, then the pros and the cons are generally going to outweigh each other. It could also be suggested that irrespective of who is in power, whether it's Democrats or Republicans, the stock market is somewhat of its own entity. So of course you have some companies that may struggle, but the companies that adapt are the ones that continue to do well. And so it could be argued that irrespective of who is in power, the stock market just continues to be its own mechanism. Now if we look at the last three presidents, so we've got Barack Obama, Donald Trump and George Bush. Now this is a graph of how the Dow Jones was performing. And so under an Obama administration, the stock market increased by close to 150%. We have Trump that it's close to 33%. And with George Bush, there was a decline. Now we can add all other presidents in the past. Let's just add them all on the graph. And we can see that more likely than not, we have an increase in the Dow Jones throughout their term as president. So we have Carter here, that was negative. We've gone through George W. Bush, and then we have Nixon as well. So all the rest of the presidents, the stock market has increased during that period. We have a range of Democrats, Republicans. So we could argue that irrespective of who is in power, in the long run, it really doesn't matter that much. It's been a few weeks since I started taking requests from the viewers out there. As a reminder, I have the email jayjamesinvestor@gmail.com. Feel free to write in and your question might be featured in a future video. So I have a viewer here, and just reading their message, they stated that I'm close to my 50th birthday and come from a generation that never considered investing and treated money as something that comes and goes. I have some extra money to invest, but I'm somewhat undecided whether I should start the investment journey given it's so late. What are your thoughts? Now, I would say that most of my viewers are in a lower age range, so you can see the stats on YouTube. It's generally around sort of 24 to 30 years of age. Now, that is promising given that those who invest at a younger age are statistically going to do better given that they've had exposure to the stock market for a longer period. The whole process of compounding has time to take place. While it does mean that for those in a generation above, that window of opportunity has been lost effectively. So the question is whether you should start this investment journey now, given that you are aware already that all those gains from an earlier age are not going to take place. What I would say is that for those in a higher age range, there wasn't the options like we have now where you can trade online and trade without having to pay any fees. It's a lot more simpler now, and so I wouldn't be too down on yourself. There's going to be a small number of people that did invest. There's going to be individuals that just didn't invest and will continue to not do so. What I would suggest is that you should be an individual that should start investing, and that's simply because everyone else is continuing to invest. The stock market 10 years from now ideally will be higher than it is currently, and so let's just say you want to retire 20 years from now. You still have the potential to have 20 years of gains, and it's not going to be possible if you just avoid the market completely. Now, for those that are of a younger age, you are able to invest smaller amounts because you have a longer time frame. What I would suggest is that if you do have larger amounts of money, you can sort of play catch up, but only do so if you have a comfortable amount of money to invest in. And that goes with everyone. Only invest with what you are comfortable with. Don't ever put yourself in a position where you invest all of your money and then you have nothing to fall back on. And that figure is different for everyone depending on how much money you are earning and potentially how much money you've saved previously. And of course the expenses associated as well. So in summary, not all is lost. You still have the opportunity to invest. And given that investing is something new for you, then welcome aboard and you'll be able to enjoy the process as well. And so earlier I focused on Biden's views with how taxation should play out. Here in the UK, we have a research institute by the name of Think Tank that made a statement that for those earning over £19,500, they should pay more tax after the pandemic. And so with any policy here, the goal of the government is to have more money. It generally comes from the form of taxation, and then they can reallocate that money to other resources. Now, unfortunately, with the second lockdown, the amount of debt is just unsustainable. From the first lockdown, it was over 100% of GDP in the form of debt. And so there needs to be mechanisms to obtain money to pay off all this debt in the future. So it's been referenced from other news articles as well that there'll be tax changes from 2025. As of now, that figure is £206 billion that has been borrowed. Now, Think Tank recommends that there should be a 4% tax on all incomes over £12,500. Now, the positive here is that there would be a 3% cut to national insurance. So effectively, you're just paying 1% extra for incomes over 12,500. And for those that are self-employed, you will not have to pay any Class 2 national insurance contributions. Now you're probably thinking at this point, well, doesn't this sound like a positive? We have less payment in the form of national insurance and then just an increase of 1% for the incomes over 12,500. Now, although it's not listed in this article, the catch here is that those that earn over £19,500, that amount of money would be taxed more heavily. Now, to get anywhere close to offsetting the national debt, there'd also need to be a change in corporation taxation. So the goal here would be to increase from 19% to 22%. They're estimated that that will equate to around £10 billion. And then when it comes to wealth taxation, they're looking at a restriction on capital gains and inheritance tax. And so in theory, homes that are over 2 million would pay additional council tax, for instance. So that's not to say these measures will take place, but it's predicted that if you go down this route, you could raise up to £14 billion every year. You are looking at around a 20-year period, assuming that no more debt has been incurred by the country. That's not likely to happen. There will be increases in debt. So even with this type of mechanism, it will take a long time to reduce the deficit. My personal belief here is that those that do earn over $90,500, I wouldn't consider them to be well off. You have to remember that these values are before taxation as well. So let's just say someone earns 20k. In terms of real income, you're probably looking at around £15,000 or £16,000. So this type of policy, they've tried to make it sound like it's only those that are well off that have to pay this increase in taxation, but it's not actually the case. The way the government does make the most amount of money is unfortunately by taxing the majority. And so those at the medium income value are going to be affected by this. That does contrast quite significantly to the policies in the US, where those with a range of $50,000 to $150,000 are actually protected from the most part from tax increases. And then we had the statement earlier from Biden, for those earning over $400,000, that's where the taxations take place. So I provided my thoughts on this topic. Let me know what you all think in the comments below. So if you enjoy this content, then do give a thumbs up. It's much appreciated. New videos are out each week, 3:30 PM GMT. And with that said, I'll catch you in the next one.